Hi, everybody. Welcome to a new week. It is November 13th. Scott Riley with the Market Update Desk and Mortgage One. We had a little bit of a slower pace last week with crunching numbers. The main items that came out last week were on Friday. We had the three Fed members come out and give some hawkish comments, which didn't help us out in the market. This week, it ramps up full throttle. We have producer price index, consumer price index, retail sales, jobless claims, NAHB housing index, along with starts, permits, and completions. This morning, we did have a little bit of news come out with one of the rating agencies warning that it could lower the rating on U.S. credit, specifically related to the volume of credit, the volume of debt we now have, and the continual need to issue bonds to cover that debt. Also, there was a CNBC report today of a composite index that they have or came up with, along with the National Retail Federation, that showed an unexpected decline in consumer spending. So that kind of precursor report to retail sales this week should give us a warning that the economy is starting to slow. Now, with the inflation data in the CPI and the PPI, we should get a healthy benefit from oil dropping. So WTI crude oil has been dropping the last 3-4 weeks, and we should see some benefit of that flowing through to lower cost and lower inflationary pressure within those two reports. Another item is we will likely get a little bit of a benefit with some lower than the previous month's shelter costs. In the September report, we saw an unexpected bump in the shelter away from home component within that. And that was an unexpected bump that we had, and it's definitely a volatile component of shelter within the report. So there are some preliminary numbers out from the Cleveland Fed and the market expectation of inflation. There's a little bit of a difference to them. I think we're going to come in even or a little bit better than what the forecasts are for both CPI and PPI. What that'll do is give some relief to the bond market, because today we are starting in the negative territory in the mortgage-backed securities and 10-year Treasury. It's not unexpected because we have all this data coming out later in the week. The traders are trying to cover themselves. Let's hope we get positive inflation information, and then that will put a continued squeeze on these short sellers on the bonds, and we break through some resistance and get us down to maybe 4.3, 4.35 on the 10-year bond, which would give us, once again, some better interest rates. Hope all is going well. I hope everybody had a great weekend. Give us a call to get pre-approved, 616-293-2189. Hope you have a great afternoon.